All right, folks, welcome back. This is going to be the first market review that I've done in over 8 months. So in today's session, it wasn't a bad session because I didn't take any trades. I didn't hurt myself at all, but I did miss the real move of the day. And I'm going to explain why. It's just a simple mistake that I made of being too hung up over my bias, which didn't allow me to be able to flex and adapt to what the market was telling me to do. But I'm not too upset about it because if you watch the NASDAQ today, the move happened very, very fast. So let's get right into it. Let me get this out the way. Let me put this in like the bottom right. There we go. Perfect. Okay. So I'm going to go ahead and just start by reviewing my daily price action log to give you all a little bit of insight of kind of what I do, my process on a day-to-day basis. So today was Friday. We had a news driver at 8:30. It was the Philly Fed Manufacturing Index. It was a medium impact driver, so it didn't really do much. Not really a serious injection of volatility. My draw on liquidity today, I was looking for higher prices, so my bias is bullish. I marked that here. The day is Friday. And then I kind of grade my performance today. Today I gave it a B because I didn't hurt myself, but at the same time, I didn't take any trades. I didn't take a winning trade, I didn't take a losing trade, and I did have, the maturity to just walk away and accept that I'm not going to take any trades today, which is something that I rarely do. So I gave myself a B for that. Pretty good. I'm going to go ahead and open this up. I start every day with the top-down analysis, starting from the daily time frame. Today, I think I started from the weekly. And basically, based on how last week's candle closed, you see how it's kind of basically indecisive. We don't really see it leaning overly bearish or overly bullish. The down close candle kind of closes in the middle. So with this close on the weekly candle, I'm not really expecting this week's candle, to close much, much lower, especially with how it's painting right here and how the previous candle painted. I'm looking for it to kind of do the same thing as this, which is actually how I think it did end up closing. And it's Friday. We're capping the weekly range. I'm not looking for a crazy move lower. So if I go to the weekly chart, let's see how we ended up closing. We basically had like the same kind of thing, right? An indecisive candle close, market open, traded up here, closed here. Didn't really do much. Just going back to the daily price action log. At the daily time frame, this is kind of what I was thinking. The market's been consolidating, right? Where we have just a lot of certainty going on around the globe geopolitically. Like everything is kind of crazy right now. Nobody really knows what's going to happen next. Israel and Iran shooting missiles at each other. Who knows, right? So that's why we have this consolidation. Market's not really doing much. So coming into today, I liked how this candle dropped lower, took these equal lows right here, and then started to trade up. And then on the lower time frame, you can see the accumulation of long positions. And in the Asia session, we had a really strong gap up opening. So after the market did that, taking the low of the consolidation range, my Notion is bugging right now. I don't know what's going on. Let's just go to the chart. Okay. And I'll explain what I was looking for and why. So we can see that this candle opened. It dropped lower, taking these equal lows here and here. So the damage is done. Sell side liquidity is taken out of the marketplace. If sell side is taken out of the marketplace, what's going to happen next? It's going to want to seek buy side. So since it cleared these equal lows, I wanted to see it clear this high at least, which is Wednesday daily high, and then Thursday daily high, and even above that, Friday daily high, or Monday daily high. This is not Thursday. This is Tuesday. I mean. So I was looking for Wednesday daily high at the bare minimum, but price did that before it offered me any opportunity to get long, and that's kind of why I missed the moves today. So if we drop down to the 4 hour, I really liked how we had this large down candle. Boom. Took this low, took that low, sell side cleared. Also tapped this little volume imbalance right here. Like that. See how the body's color right inside of it? Nice. And then we had a strong gap up opening, and then boom, you see this candle close near its high. This candle, why my bias is bullish going into 9:30? Because on the 4 hour, I see this down candle takes this candle's low, trades into this gap right here. But where did it close? It closed kind of indecisive, and it closed above the gap. So if that candle closes indecisive, that tells me the market's comfortable where it's at. It's probably not going to reverse. And number two, it closed well above that gap, tells me that it's strong. So these are just the things that I look for to tell me what I'm looking for. I basically follow where each candle closes from the daily all the way down to the 5 minute and the 1 minute to tell me what is the market going to do next. These are just the things that I follow from studying ICT. I've trained myself to look for these very things here where the candles close on PD arrays and where the following opens to tell me if the market is bullish or bearish. So if this information, I first see this at 8:30, so I'm bullish on this candle because this candle traded down into this gap but closed above it. That's a sign of strength. So going into 9:30, my bias is bullish, and I was anticipating this candle to close near its high because it did this. You can see that's not the case and actually left this large premium wick once it cleared Wednesday daily high right here. And that's the move that I miss. So dropping down to the hourly, got some more information on the lower time frame. You can see how we had this down candle that cleared those relative equal lows, tapped that volume imbalance. Is it a volume imbalance? Hold on, let me double check. It's a volume imbalance, correct. And the market spent time underneath Monday's daily low. So the market spends time in a pool of sell-side liquidity and then closes underneath it. And then the following session, what happens? We have a strong gap up opening, boom, runs right from the Asia session. In my eyes, I'm seeing this as accumulation of long positions below this low in a pool of sell-side liquidity. And now the market's going to reverse and take the other side of the range, which I was focused on this high at the bare minimum. And then these highs next, because it's very, very clean. You can see how I annotated that. So at the open, what I was looking for, what I wanted to happen, not what actually happened, was I wanted this candle to drop down into this gap and this down candle and then work towards that high. You can see that's not what happened, because what the market did first at 9:30, it opened, took this high first without seeing a drop lower, and then reversed. So it never offered a discount, never rebalanced this range and then trade higher. It just continued to run up into a premium, and that's why the market reversed. And with these conditions, the market's consolidating. So this is also something that I did wrong and kind of missed. The market's consolidating, so I can't really expect continuation in that move. And I can't really expect it to deliver precision to old daily highs and lows because we're in consolidation. A lot of times when the market's in consolidation, you see it do this very thing where it just stops shy of that high and then turns back inside the range. So dropping down to the 15-minute, you can see how high the market opened up in a premium. What I wanted to see was a drop down into this first and then take Wednesday daily high. But you can see that I took Wednesday daily high before the market even opened on the 9:15 candle. So right then and there, I should have been thinking to myself, this thing is really high in a premium. It's already delivered the objective that I was looking for before the market even opened. I should probably adapt to this. The market's probably getting way too high in a premium. And I should probably look to be a seller more than a buyer up here, because I first established that bullish bias at 8:30 when the market was all the way down here on this candle. I'm seeing this candle close over this high. It's a sign of strength. And what I want to see from this point on is the market drop lower into these down candles, that one solid down candle on the hourly time frame, which is also these 3 consecutive down close candles on the 15-minute, trade into this gap, which is also on the hourly, and then trade higher. So there's a confluence right here of these down candles and this gap on the hourly and the 15. That makes this a strong area of interest for me to look to be a buyer, because you have time frames that agree. The hourly agree and the 15-minute agree that this is probably going to be a strong area of support if the market drops down into there first, but it doesn't do that. But I held conviction in a bullish bias today. So when the market did this, I wasn't able to be flexible and adapt to that. Instead, it opens, boom, takes Wednesday's daily high, and then boom, reverses. Now my model is simply looking for the close of candles and the open of the next, which kind of tells me where the work is done, where the damage is done, and what the market should draw to next. So my model, and what I'm focusing on after I discovered that cycle in my previous video, is just looking at where the candles close and then how the next candle should behave based on that information. And then I just want to see the market draw to the opposite area of price that is smooth. So it's simply looking at where the candles close on PD arrays. That tells me the work is done there, and then looking for an area of price that is smooth. So my model is still here present on this sell setup, but I wasn't looking for sells. I was looking to be a buyer, but it didn't give me that. But I was too hung up on my bullish bias, so I wasn't able to catch it. So I know exactly what I did wrong today, which is what you should be able to do too. Every day you got to sit down at the end of each session and go through what was my pre-market plan, what was I looking to execute on, but what did I actually get and how did I actually execute on that? I learned that from a video of Umar Ashraf. He sat down and basically broke down like the 5 stages of development of a trader. Great video. Definitely recommend watching that. So you can see that this candle takes Wednesday daily high, but it closed below it. That's the first sign of weakness. That's the first sign that's telling me you should probably look to be a short seller. So whenever I get a candle that closes like this and leaves a wick, this is a sell example, right? So this candle trades up into Wednesday daily high, but closed below it. That's a sign of weakness, because if the body closed below it, that tells me weakness. So now I have one or two options. Number one, I can look for the market to find a resistance inside of this wick, reject it, and then go lower. Or number two, I can look for the market to drive above the high of this candle and then fail and then reverse. Because if you look in literally every swing point in the market, you're going to see the close of the bodies on candles indicate that it's using some PD array. And then the following candle is going to either take that candle's low or it's going to use the wick of that candle in reverse. So it's kind of the model that I built. It's just something that I'm focusing on. So dropping down to the 5 minute, you can kind of see the original consolidation of this market maker sell model here and here, which is kind of what I was spotting on the 1 minute time frame. Because I knew that going into today, I was looking to be a buyer, but the market had gone so far that it didn't make sense after it did this thing right here. Because what I see repeat over and over and over and over again in price is the market just run in one direction at 9:30, but it leaves liquidity that is very, very, very smooth on the opposite side. So here we can see 9:30 opens. It does not disrupt any of this down here. It leaves it intact, it leaves it smooth, even this down here. And then it runs up into Wednesday daily high. It makes one poke above it, and then makes another poke above it, and then it fails. This is something that repeats over and over and over again, and I think I'm going to backtest this and build a model out of this, because this just happens over and over and over again. You see 931 run in one direction, but in the pre-market session, there's something that's just blatantly obvious, very smooth, and it's just left there. So in this case, I saw this large down close candle, and that piqued my interest in a sell setup. But I was bullish on the day, and recently I've been trying to train myself to submit to bias and just hold conviction and confidence in that. Now my bias today did play out. It delivered to the objective that I was looking for. But once it got to that objective, new information told me, hey, I'm not going higher above this high. But I still held conviction in that bullish bias and wasn't able to adapt to this new information. So this tells me when I'm forming a bias, like I should hold a bias up until X level. And then once it get there, can it continue or is it going to reverse? So that allows me to be flexible and adapt to new information once the market does deliver that. In this case, I was looking for Wednesday daily high. I should be bullish until it delivers to Wednesday daily high. Once it gets there, can it continue or can it reverse? Well, this information right here tells me that it's not going to continue, because in order to confirm a trade for me, I need to see a large candle come in. This candle right here at 9:45 opens, boom, trades lower with speed, distance, and magnitude. I'm watching it in live, and it closed near its low. It closed over these up candles and inverts this gap. So that tells me there's a change in the state and delivery. Something has changed, and now the market is in a sell program. Also, this down candle should have acted as support if the market was bullish. You can see it kind of initially does, but then the market fails with a large down candle. This candle opens, trades up into the wick of this candle, and also this down candle that should have acted as an order block. Now I saw this as a sell in the moment, but I wasn't confident to take it because I was telling myself in the back of my mind, I'm bullish. Like, bro, I'm not looking for sells, so I'm not going to sell this thing short. So I wanted to wait for it to be absolutely clear across all time frames. I wanted to see confirmation from the higher time frame first with the close of this 9 o'clock candle. The 9 o'clock candle closes at 9:59. So I wanted to wait until 9:59 for the market to close on the 1 hour and the 4 hour, because we also have the 6 o'clock 4 hour power of 3 closing at 9:59, and then you have a 1 hour 9 o'clock power of 3 closing at 9:59. But by the time it did that and gave me the confirmation, the close well below Wednesday daily high, the market had already ran so much. And then it just kept going and going and going. So you can see that 9:59 close all the way down here. So if I'm waiting for that close on the hourly and the 4 hour, it's too late. But if I do look at the 15 minute, if I take in this information, you see how the market drives above Wednesday daily high but closes lower, and then a drive above that candle fails. That's my model right there on the 15 minute. So the lower time frame is going to give me the confirmation first, The reason that I wanted to wait for the 1 hour and 4 hour confirmation as well with the close below on those candles is because my bias in the day was bullish. Now, I could have adapted to this information and sold short like that, maybe if I had a looser bias, but I'm not upset about missing this trade because it happened so fast and it didn't offer any retracement for me to get on side. So it's not something I'm too terribly upset about, but I know exactly where I went wrong. So that's kind of a review for today's session. I'm going to walk y'all through my daily journal and how I take notes intraday. So I'm starting this new exercise where every 15 minutes, it's like a 15-minute journaling exercise. You kind of check in with yourself and you ask yourself, how are you seeing the market? Like, how am I reading price? What am I looking for? How am I feeling? So I did that. And this, boom, like that, it's automatically a game changer. I can feel it. Every 15 minutes, I'm reminding myself, what am I looking for? What do I see right now in the market? So I asked myself at 10 o'clock, what am I thinking about price? And I was so stuck up on that bullish bias that even after the huge drop lower, I thought my initial plan was playing out where the market would drop into that down candle on the hourly. So at 9:45, I said, I think we can for sure return to the lows at 9 o'clock, but only after price has delivered premium objective. I know I shouldn't be a seller before 10 o'clock because this 4-hour candle should close near its high. So that sentence right there shows me, not you, ChatGPT, get out of here. All right, I'm gonna have to edit this out. Back to what I was saying. I was so caught up on the idea of this candle closing near its high that I just canceled out the idea of selling short there. Even though that I saw like this is probably a good sell setup, I just canceled out the entire idea because I was like, no, this is going to close on its high. No, it's not. The market's telling you it's not going to do that. So you need to adapt to that. So I tell myself I see a large down candle come in, but I still need that confirmation for the higher time frame that it should go lower because of how the candles close, right? So that's why I was explaining how I was waiting for the 1 hour and the 4 hour to close below Wednesday daily high, leave a premium wick, and then look for a retracement into that premium wick to sell short on. And then I was feeling a bit rushed to sell short on it because it was leaving very, very fast. So I told myself, bro, just wait until 10 o'clock for it to be very, very clear because that's when the 1 hour candle and the 4 hour candle is going to close. Now you have those higher time frame candles supporting the notion of the market going lower after a run above Wednesday daily high. And then at 10 o'clock, I asked myself, what am I thinking about price? 10:15, remind myself again, still patiently waiting for market to do this, this, and this. 10:30, haven't entirely canceled out the idea of a long. So when the market dropped lower like that, I missed this move entirely and I knew I missed it. So at that point, I thought, okay, maybe the possibility of it trading down into this gap and this down candle for a long is still there. So I kept waiting and waiting and waiting for that. But I know exactly what I need to see in order to get long. And the market never gave that to me. So I never had a long. So I never took a long. So I never took a trade. And then basically by 11 o'clock, if I pull this up again, there's nothing for me to do here. The real move already panned out, and to wait for the next setup would take hours to develop. Why would I try fading this long? I wouldn't until Monday. And I just walk away like a professional. That's how you should be. And then a post-market analysis. So my post-market analysis, I got this from the video that I mentioned earlier. Umar Ashraf did like a 2-hour class on all the stages of a trader's development. So I asked myself how I approach price versus what happened, my intraday thought process analysis, like what I was thinking as the market was showing it to me. What did I miss, which is what I want to touch on. I didn't do this in this analysis, but I'm going to do it in the analysis moving forward. Like what did I not see that the market gave to me? And then what did I end up getting? Like what did I execute on? Well, I ended up getting nothing today because I had a lot of conviction in my bullish bias, anticipating very specific things to happen, like the 6 o'clock 4-hour candle closing near its high, which didn't allow me to adapt to new information. What was I going to do and how did I execute that? I was going to be a buyer on a drop lower at 9:30, but I never got that. Instead, price continued to trade higher at the bell, delivering Wednesday daily high and reverse lower. What I was looking for didn't play out, so I didn't execute on that idea. Because I held conviction on my bullish bias once a premium objective delivered, I wasn't able to adapt to new information. And then a reflection. What did I learn from today? What did I do wrong and what did I do right? So these are the processes that I'm going through on a day-to-day basis. Go back to the Notion page. And everything is right here. Then at the end of the session, I'm doing a post-market analysis where I'm going through and annotating what I was looking for and what actually delivered. So these are the kind of the steps and the process that I'm taking to work towards consistency and discover the model that I'm doing. And I'm getting there and it's getting close. Outside of that, just a quick update on literally everything that I'm doing. I'm building this thing right here. Okay, this is the video that I talked to you about that I was studying, right? The stages of becoming a successful trader. Stage 1, all the steps mentioned in the video. This is from Umar Ashraf. And then the different stages. You have novice, developing, intermediate, advanced, professional, and the things that you should be focused on each stage, right? And then the 5 trading truths. What is this going on over here? I don't know what's going on over there. Let me get rid of that. Let me delete that. Okay, boom. And then the 2 types of traders. So working on building these notes, working on consistency, and that's it for this one. See ya.